little bit more broadly about kind of the investment needs in this space.
You know, what you're seeing right now in the infrastructure space is a significant shift in the demand for hard assets or infrastructure assets. You know, take Milken, for example. You have some fantastic macro content here. The opening session this morning was with the IMF, and guess what? In the first 3 minutes, you were talking about energy transition, and the session actually concluded talking about energy security and the supply chain. So if you take a step back, you're in the middle of an energy transition, which is a supply-side dynamic. Compounding that dynamic is now this new demand for energy. What we are seeing at the micro level is actually very consistent with what you're hearing about at the macro level. There's a real convergence that's taking place between this asset-light, high-growth, very glamorous technology sector suddenly converging with this capital-intensive, development cycle-oriented infrastructure sector. All of this investment in technology and AI is going to require a significant amount of investment downstream in data centers as well as power generation capacity.
It's amazing how AI has upended, right, the technology space in terms of capital intensity. Having said that, all the power that's needed to run artificial intelligence and all of the computations that's needed, can we do it in a sustainable way, or we're going to have to rely on some of the old fossil fuel burning, if you will, ways in terms of energy?
Look, we tend to be very thoughtful as we think about investing in the energy transition at Carlyle. In fact, one of our chief energy strategists, Jeff Curry, has recently published a lot of research on this topic as well. And Harvey Schwartz this morning also said that, look, we have to be very practical as to how we approach the energy transition. You can't just flip a switch and go green immediately. We have a thesis-driven approach to investing at Carlyle, and we knew 4 or 5 years back that there was going to be a significant demand for clean and sustainable energy sources. We actually didn't like any of the existing investment opportunities that were available in the market. So any of the incumbents, we didn't like how they were organized to take advantage of that growth opportunity set. So guess what? We started our own company from scratch.
Right.
It's called Copia Power. We started with 4 employees, and as of the first quarter of this year, we are developing 20 gigawatts of power generation capacity in the US. What's interesting about this company is not only generating power generation capacity, it is actually building that capacity in areas where you can also develop green data centers. So now you're talking about a paradigm shift. You're talking about locating data centers to where you're actually going to produce power. And that's the forward thinking that you tend to see in the private markets or in the private equity, infrastructure equity space.
The Copia deal was a big one, and it got a lot of attention. You can't do what you do, whether it's that deal or the other ones, without an eye on regulation. When it comes to regulation and how disjointed regulation is around this country when it comes to power generation and power sustainability here, how do you navigate that? Because you're trying to sort of build something that in one state might be different than another state, when federal regulation that could easily change, I don't know, a year or two from now.
I think you're so spot on, which is why you need to focus on the micro and you can't just simply focus on the macro. Look, investing in these kind of infrastructure assets requires time, patience, but a lot of deep sector expertise. You know, regulatory insights is one thing. You need to have capital markets expertise, development expertise, permitting, procurement, and obviously commodity markets expertise as well. The view that we take at Carlyle is that you have to work in collaboration with your regulators as well as your public and private sector participants. It has to be a collaborative approach. That has to be with policymakers as well as utilities and grid operators. Remember, that is a significant bottleneck right now. You know, you're hearing about transmission constraints, even for the build-out of new data center capacity, but we just have been very good at working hand in hand with local constituents, as well as public market stakeholders that have an important seat at the table. One fantastic example of that is how we're redeveloping the international terminal at JFK Airport.
Yeah.
You know, I flew out of JFK last night.
It's a lot better. So we have to thank you.
We all thank you.
And look, it requires patience. It requires a lot of capital. This is a project we got involved in 2019.
Right.
And we worked with the Port Authority of New York and New Jersey through the pandemic. That was incredibly challenging. And today, you have a new terminal terminal that's getting built. It is the international terminal at JFK Airport. But yes, you absolutely need to have those insights, but you also need to be practical, and you need to be humble, and you need to approach those projects in that way.
A little bit later, we have to ask you what you can do for LAX, because they need some help out here. In all seriousness, though, when I hear about the project at JFK, or even with Copia, you talk about the complexity of doing that.
Yes.
But part of that complexity is also, you're exposing yourself to a lot of supply chain risk. And we know that supply chains have been disrupted a million times over the past 4 or 5 years, from the pandemic to the trade tariff wars and everything else. How do you deal with that?
So we actually think it's an important tool that we have in our toolkit at Carlyle to drive value creation in our portfolio companies. If you think about infrastructure as an asset class, what are the levers you have to drive economic outcomes? Building your assets as cost effectively and efficiently and on time as possible is important. So managing that supply chain, both from a cost perspective as well as certainty of time perspective, is important. We have some very good strategic relationships globally. And the supply chain is a global supply chain. I think it's very easy to say that you're going to onshore the entirety of your supply chain. It depends on how further upstream you go in your supply chain. So you have to be very strategic about it. And we think that it's an edge that we have right now.
Pooja, how much does politics play into all of this? And I think about the upcoming November election. And does that change anything in terms of the sustainable investment initiatives that certainly the government has had its hand in it pretty aggressively? Or will the public, or will the private markets and private companies just continue that march towards more sustainable energy uses? How do you see it?
It's a completely fair question. Look, the Inflation Reduction Act was extremely meaningful, but you cannot call all politics the same. You have federal policy, you also have state-specific policy as well as mandates. And look, we have fantastic insights. We're headquartered in Washington, D.C. We work very closely with our stakeholders, and those include policymakers both at the federal level as well as the state and local level. What I go back to is the fundamentals here. There is a need to invest in this infrastructure. That demand is coming both from the private as well as public sector. There simply isn't enough public policy or public capital that can actually fill the gap. There's plenty of room for private capital to actually play a very important role here. And candidly, when I take a step back, and I always think about, relative value comparison between what you're seeing in the public markets right now, and I'm talking about the equity or the credit markets right now, versus the results you can achieve in private markets, I actually think that private equity has a very important role to play here, simply because we're not managing outcomes to a quarterly basis. We have the ability to be patient as well as strategic with our portfolio companies and drive the right outcomes there.
All right, Pooja. All right, this is now time for the big, broad questions. Normally, Carol does this, but I'll pick it up.
I gave it to you.
Thank you. What is kind of the big risk, though, that you're focusing on over at Carlyle? I'm talking about longer term.
Look, I always tend to approach everything from a commodities market perspective because they're just important, right? Even if you think about what could be a constraint to all this investment that's going into generative AI and technology, it's commodity, it's energy. So being long energy is incredibly important from our perspective. But what could cause disruptions in energy markets? Obviously weather-related patterns, but obviously geopolitical uncertainty as well. So that is a dynamic that we're very focused on. And that can have an impact on supply chains and ultimately even monetary policy. So we're very focused on all of these variables as we think about risk management across the entirety of our portfolio.